Hey traders, it's John Fortune here with this week's weekly Forex Forecast. We're going to start off by looking at the recent rally in the DXY, and we're also going to look at the fact that crude oil has remained strong, although we've seen the dollar index appreciating and what that means for the economy. And we're also going to be looking at the recent sell-off in the stock market and whether this is a buy the dip situation or not. So starting with the dollar index, and we're on the daily chart here just as we started last week's video, and you can see that we broke to the upside last week, and in previous videos I highlighted the fact that because we had a lower low down in this area, we had a developing head and shoulders pattern. And last week we had a nice setup where we had this engulfing bearish candle right at the left shoulder. And what I said in last week's video was that this sets us up essentially for a breakout trade. If we start to break the lows of this engulfing candle, that would be bearish and we would like to see a sell-off. And if we failed to break the lows and we started to break higher instead, this would actually be bullish and it would be a continuation of this overall uptrend, and in the process of making new highs we would negate this developing head and shoulders pattern. And that's exactly what we had last week. We broke to the upside and we started to break with momentum. So going into this week, when we look through the currencies, the breakout to the upside in the dollar index does make it the strongest currency going into this week, and it means that I go into this week with a bullish bias on the dollar index, and I do primarily favor dollar strength positions going into next week out of all the different currencies. Looking at euro dollar, you can see we have a really nice downtrend forming now in euro dollar after that breakout to the upside in the DXY last week. We have strong momentum to the downside after we broke these lows. You can see we were lacking a bit of momentum, but when the DXY broke out, that's when we started to see momentum coming in. And this is really pointing to further declines in this market next week. And as we just saw, the euro is one of the weakest currencies. So I do like euro dollar to the downside going into next week. Any pullback in this market is going to be viewed as an opportunity to look for bearish reversals, and perhaps we come back and retest the lows over here. And any bearish reversal in this market would be viewed as an opportunity to look for short positions down to the next key of support to the downside and the target set, the 1.1496. Next is pound dollar. Now pound dollar was a market highlighted in last week's video for potential short positions if we started to break above the high of that bearish engulfing candle in the DXY, if we started to break higher last week. And as we started to break higher, we did see pound dollar coming down. This was a nice market to the downside last week. And we took out both of the targets set, finishing the week at the second target here at the 1.3480. So going into this week, I do like this market to the downside once again, especially as the pound is one of the weakest currencies going into next week. So any pullback in this market, and we've already started to bounce, any pullback is simply viewed as another opportunity to look for short positions or short setups in this market. And if we start to get bearish reversals, I'm going to be looking down towards the next key of support to the downside and the target set, the 1.3399. Next is US dollar Swiss franc, very similar to euro dollar, obviously in the opposite direction. And I do like US dollar Swiss franc. I think I prefer euro dollar to the downside though going into next week. However, we are starting to see a pullback in this market, and any continued pullback is simply viewed as an opportunity to start to look for bullish reversals in this market up towards the next key of resistance, the upside and the target set, the 0.9370. Next is US dollar Japanese yen. Now we've had a really nice strong rally to the upside in this market, and we've started to pull back from the highs, and this is exactly what we'd want to see after a strong rally, because this is indicative of continuation to the upside. However, we need to see a pullback in order to get involved in this, and we have started to pull back. So any deeper correction in this market going into next week is viewed as an opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 112.19. Next is New Zealand dollar. Now we have really nice strong momentum to the downside, so again there's a very good chance we're coming down for lower lows in this market, so this is one to watch going into next week. We are starting to pull back already, which is great, as this is providing us the potential opportunity to start to look for bearish reversals. Perhaps we come back and retest the head and shoulders low over here, but any pullback in this area, any continued pullback, is simply viewed as an opportunity to start to look for bearish reversals in this market down towards the next key of support to the downside and the target set, the 0.6807. Next is Aussie dollar. Now Aussie dollar is a very interesting chart because as the US dollar index has rallied to the upside and we had quite strong momentum last week, we did see the Aussie selling off, but you can see this is quite a choppy market. Now as the US dollar index rises and we see further advances to the upside in the DXY, you would expect the Australian dollar to be the most exposed currency to the downside. And in a deflationary scenario, if that were the case, you would see the Australian dollar falling harder and faster than the other currencies against the US dollar index. So when we look at crude oil next, we're going to be talking about that a little bit more and what this is potentially telling us about the currency market's view on current economic conditions and also, of course, economic conditions going forwards since the markets are forward looking. So going into next week, I do like Aussie dollar to the downside, although it is not my number one choice because of the lack of momentum compared to some of the other markets we looked at, like New Zealand dollar, like euro dollar, like pound dollar. But any pullback in this market would still be viewed as an opportunity to look for potential bearish reversals down towards the next key area support to the downside and the target set at the 0.7158. Next is crude oil. Now, crude oil is a market that we've been looking to the upside over the last few weekly forecasts, and we've been taking out the targets to the upside. And last week, we did take out the target set at 74.53. Now, what's interesting is when we look at the crude oil charts, we've been moving to the upside. And in fact, we had some quite strong momentum in this last rally to the upside. And this is in the face of an overall stronger dollar. The dollar has actually been rising to the upside really since the beginning of the year. And so what does this mean? Well, usually if we see a stronger dollar, especially if we get a flight to safety because of concerns over economic growth, you would expect to see crude oil falling to the downside as there's less demand as economic growth declines. However, when we see the US dollar index rising and at the same time we are seeing commodity prices like crude oil rising, what this is telling us is the markets here are indicating stagflation. So although the prospects of lower growth are there, we actually still have inflation because this is coming from the supply side, not the demand side. If it were coming from the demand side and we had lower demand, you would see crude oil falling as we saw the US dollar index rising. But because inflation is coming from the supply side, we've been seeing crude oil rallying in the face of a stronger dollar. And of course, this is feeding through into the currency markets, and it's why we're seeing the euro and the pound as the weakest currencies currently, instead of, say, the Canadian dollar and the Aussie dollar, the commodity currencies, which you would expect traditionally would fall in a deflationary or a disinflationary scenario if we were seeing lower demand and lower economic growth. So going into next week, although we are seeing a rising dollar, it could be a warning sign that crude oil could start to roll over. However, for the time being, I am still bullish on crude oil. Any pullback in this market as it currently stands is viewed as another opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 76.90. And if we can get a break through here, if we come up and take this out first perhaps and pull back, we're going to be looking up towards target 2 at the 79.97. Next is pound CAD. Now, in last week's weekly Forex Forecast video, I highlighted the fact that while we were waiting for the DXY to break out either way, and we could trade it either way, the other opportunities in the markets were Canadian strength setups, and they were looking like the best setups going into last week. And those markets did actually outperform, and they were the best setups from last week. And pound CAD was a market we looked at, and we took out both targets, finishing the week at the second target of the 1.7109. Going into this week with crude oil still strong off of the back of that supply side inflation, and with the pound as one of the weakest currencies, I do like pound CAD to the downside. Any pullback in this market is going to be viewed once again as another opportunity to look for bearish reversals down towards the next key of support to the downside and the target set at the 1.7023. Next is EurCad. So what we're looking at here is the second weakest currency going into next week versus the Canadian dollar. I do like this market for further declines going into next week. Any pullback in this market is simply going to be viewed as an opportunity to start to look for bearish reversals down towards the next key of support to the downside and the target set at the 1.4585. Next is CAD yen. Now, this was a market highlighted as one of the better opportunities in last week's video because we had the Canadian dollar strength play here, and we did take out the target set at the 87.86. Going into this week, I like this market to the upside once again. Just bear in mind the Japanese yen is not as weak as the euro or the pound, so EurCad and pound CAD are looking like better opportunities next week. But any pullback in this market is going to be viewed as an opportunity to look for bullish reversals once again up towards the next key of resistance, the upside and the target set at the 88.44. So moving on to stocks and starting with the SPX, you can see recently we've had a sell-off in the SPX and in stocks in general, and this has coincided with the recent rally in the dollar index in the DXY. And I have been bearish in the last couple of videos on SPX as we've been coming down. So the question is this a buy the dip scenario, or are we going to see a much bigger decline in stocks? Well, there's a couple of indications that we are going to start to head higher in the SPX. Whether it's from where we are now or whether we come down a little bit lower first remains to be seen. However, if we look at the yield curve, you can see the yield curve today compared to 1, 2, and 3 months ago is actually pretty steep, and it's arguably steeper than it has been in the last 3 months. So what this is telling us is that the bond market does not believe this is the start of a major decline in the stock market. And if we look at data that came out on Friday, which is the 1st of October, we had the ISM Manufacturing Purchase Manager Index out of the US, and this came in at 61.1, which is up from 59.9 the previous month. So again, this is another indication that in the short term, we are likely to be heading higher in stocks. So in terms of the SPX, I do still have a bearish bias on the SPX because we don't know when that turnaround will come. So I would favor short positions in both the SPX and also any individual stocks which make up the S&P 500 index. And you can see last week we came very close to the target. We've left this target on here because this was almost, it almost took this out, just missed it by a couple of points. So any continued pullback in this market would be viewed as an opportunity to look for further declines down towards the 4287.69. And if we can break through here down to the next key area support to the downside at the 423.3.13. Now, as we're going to see next, the Russell 2000 is in fact still bullish, and so when you put these things together, there are opportunities both to the upside and the downside in stocks next week. And if you are constructing a long-short portfolio, as an example, I would favor having some long positions in small cap stocks in the Russell, and conversely, looking at short opportunities or short stocks in the S&P 500 or stock market indices, which are currently depressed. Next is the Russell. Now, as you can see, the Russell is technically structured to the upside. So if you had a bullish bias on stocks and you wanted to reflect that opinion, it would be better off put in the Russell, because if SPX turns up and also the Russell turns up, what you're going to see is a big breakout in the Russell. This is going to break with momentum. Whereas the SPX, because it's already selling off, is probably going to come up with a bit more of a struggle as it starts to bottom first and then breaks higher. So this really sets us up both ways next week. If you want to be positioned for further advances in the stock market, the Russell is set up nicely to do that. And if you think there's going to be further declines, the SPX and also the Nasdaq and the Dow Jones, as we'll see, are the markets you would want to look to be short. If you want to hedge out your position and you want to be both long and short, then you can also do that with the Russell and with the SPX and Nasdaq, as we're also going to see next. So very simply put, going into next week, we did come down and test the 2158.55, which was the area I highlighted for you guys in previous videos to look for a potential bounce. We did bounce from here. This is the line in the sand. If we start to break this, this would be bearish. And certainly if we break the 21070, this would be extremely bearish and a major breakout to the downside. As it stands, any pullback in the Russell is simply viewed as an opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 2323.32. Next is the Nasdaq. Now, in last week's video, I was bearish on the Nasdaq and we came down and took out the target set at the 14781.63. Going into this week, just like the SPX, I do have a bearish bias on this market once again. We have broken a near-term head and shoulders, and even if we are going to see stocks turning to the upside in the next month or so, we could come down further in the Nasdaq, in the SPX before that happens. We have about 5% declines. We could come down to 10%. So I'm personally not interested in trying to pick the bottom here. What I would like to see in some of these bearish indices is if we can come back and break above the line in the sand and start to turn like this, that would be great. And then we could start to form a right shoulder, and that would be the opportunity to look for further advances in those markets. As it currently stands, what I'll be looking for going into next week is any pullback in this market will be viewed as an opportunity to start to look for bearish reversals. I'm going to be looking down towards the next key of support to the downside and the target set at the 14457.33. So again, I would favor short setups in the Nasdaq or in stocks in the Nasdaq index next week. Next is the Dow Jones. Now, in previous videos, I did highlight the fact that this is actually a near-term correction in the Dow Jones, this failure over here, and we started to break lower. So I am still bearish on the Dow Jones if or until this starts to break higher, which it has not done yet. Last week, I was looking for a pullback towards the 35,459 and a sell-off, and we did have this, and we're starting to make our way towards the target set. So any pullback once again in this market is simply viewed as another opportunity to look for bearish reversals down to next key of support to the downside, the target set at the 33318.14. So I would favor short opportunities in the Dow Jones or in stocks within the Dow Jones next week. Next is the Nifty. Now the Nifty has been a very good performing market in recent videos, and we've been looking for this to the upside for a while, and we've been taking out all the targets in the Nifty. Last week I was looking for a correction towards the 17357.85, and we have got this now. So very simply put, any continued correction in this market next week towards this level is simply viewed as an opportunity to look for bullish reversals up towards the next key of resistance, the upside, the target set at the 18047.15. So I would favor bullish setups in the Nifty or stocks within the Nifty going into next week. Next is gold. Now in last week's video I was looking for further declines in this market down to the 1718.21. We came very close to taking out this target, and we had this big rally in gold at the end of the week. Not, in my opinion, a reversal. This looks more like profit taking coming into gold as we started to lack momentum, perhaps even a bit of a falling wedge here. And so very simply put, I'm just viewing this as another opportunity for anybody who was not involved previously to start to look for short positions. Any continued pullback, as long as we don't start to break above the 1786.43, is simply viewed as an opportunity to start to look for bearish reversals and breaking down in gold. Any setup like this will be viewed as an opportunity to start to look for shorts once again, down towards the target set last week at the 1718.21. Next is silver. Now in last week's video I highlighted the fact silver was structured to the downside, and we did come down and take out the target set at the 21.67. That was pretty much the move for the week in silver. Going into this week I am still bearish on silver. I am looking for further declines in this market, especially with a stronger DXY. Any pullback as we're currently getting is simply viewed by me as an opportunity to look for bearish reversals once again and bearish setups. Any bearish setups in this market will be viewed as an opportunity to look for shorts once again, down towards the 21.15. And last but not least, we have Bitcoin. Now Bitcoin, despite the strong rally in the dollar, has actually rallied and reversed with this last move to the upside. And it looks like we have here an A, a B, and a C. And it looks like Bitcoin is actually coming up now for another rally and to make new highs. The next target is the 50,505, and you can see because we had this failure of a head and shoulders reversal over here, as this failed, which now forming the A, B and C, as this failed down here on this breakout, stop losses were taken out, shorts covered their positions, and we got this short covering rally. So very simply put, going into this week I am looking for further advances in Bitcoin. What I'd like to see is, because we're right near the top here, is any pullback in this market will be viewed as an opportunity to look for this bull flag type pattern, and any bullish reversals will be viewed as an opportunity to look for moves up towards the 50,505 in Bitcoin. So that is it from me for this week, guys. The rally in the dollar index alongside a strong crude oil is pointing towards stagflation. And although a number of the stock indices are not bullish, it does not look like we're going to get a market crash, but just beware, we may get a deeper correction in some of those stock indices before we head higher. So as always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.